Hayden Locke, President and CEO of Marimaca Copper. We're developing the really unique Marimaca oxide project in northern Chile. It's a copper oxide project, very short timeline to delivery, and really a standout in the copper development space in our view.
Good to see you again. We saw each other quite recently. You were on a copper panel with a couple of other folks on there, and you mentioned something to me, and I want to talk to you about it because you put out a report today with the help of Wood Mackenzie. What does it tell us?
Yeah, look, it's something that I've always thought about this project. That given the various benefits and the fact that it's an SX-EW plant and where it's located, that it was always going to be on a global scale relatively low carbon intensity per tonne of refined copper produced. And so we engaged Wood Mac as an industry expert to do an analysis of our project using all the PEA inputs. And the conclusion validates our viewpoint that this is potentially a very low carbon intensity project, and we can talk in detail about why we think that's important, but it really shows if we get the energy mix right, which we believe we should be able to do, that we should be right down in the bottom of the carbon intensity curve per tonne of refined copper produced.
Yeah, no, I saw that, and I do want to talk about the detail of it, because someone said to me last week, CEO said to me last week, they've done something similar. It reduced the cost of their money. So to me, I'm immediately attracted to that. But why did you do it? What do you expect to get out of it? What's the so what bit?
Yeah, exactly the same mindset. What I found in the various mining projects that I've taken through permitting, and it's changed quite significantly over the last 10 years, is there is a heightened focus by the traditional lenders in this industry on mining projects with a specific focus on sustainability. And obviously with where the world is going, we're in the middle of COP26 here in the UK, with where the world is going, carbon intensity and carbon emissions become increasingly important. And we had a view that it's going to be a key diligence point for any financing institutions and financing partners that we engage with when we go to build this project.
But it's got to be more than just a science project for you guys and go, oh, look, we're low carbon. What do you mean when you say the institutions looking at this will look favorably upon it? Why does it, for them, reduce the cost of the money that they're going to provide you? What else can you use it for? Why does this put you above your peers?
Well, if you look at the analysis, there are a pretty wide array of carbon intensities per tonne of refined copper produced across the industry. The reason it's important is all of the banks, traditional project financing banks, but also the institutions, and you're seeing it more and more in the traditional money institutions, are really focusing on your level of emissions. And they're saying in some cases, we won't even lend to you if you've got very high emissions. And so, really this is important. We believe it'll translate into a lower financing cost for us. But I think more importantly than that is it's almost becoming a prerequisite now to have addressed these sorts of issues. If you are really going to finance a mining project, you have to have addressed sustainability, your environmental frameworks, your engagement with stakeholders. And we see this as the next step in that framework. It hasn't been fully rolled out yet, but we see it. We're looking into the future and saying, we think that this is going to become very important. And if we can address it before we get to the financing steps, then it's just going to make our life much easier when we go into the financing stage.
So it may save you money when you go to raise money on the CapEx side of things. Does it make things more expensive for you in terms of having to deliver in a certain way?
No, that's the benefit of this analysis, has really shown us that we can connect to the national electricity grid, which is what was proposed in our PEA. And all of the engagement that we've had with the energy producers in northern Chile is that they can confidently say that when we do a PPA with them, a power purchase agreement with them, that they will be able to deliver us electrons that are effectively coming from renewable sources. So it doesn't change our approach. It just is a real value add for us, and another unique point for this project, which already has so many unique aspects.
Okay, building a mine, it's tough, lots of moving parts. I want to make sure this isn't just another sort of box ticking exercise from a company, makes nice headlines, nice PR, but doesn't actually translate into anything. You're telling me you potentially can get cheaper money as a result. It doesn't affect your operational costs. How else can you use this to your benefit and to your shareholders' benefits?
Well, I think in the longer term, and the strategy, and this is something that we covered off on our panel discussion, is, I think everybody's of the mind that there is going to be a carbon tax coming at some point. And those groups that can show and trace back and show that the carbon intensity of the product that they're delivering is at the low end of the spectrum, we believe it will translate into a premium product value. And so therefore it's going to be positive for our project. Now, we can't quantify what that's going to be at this stage, but if you just run back of the envelope numbers and you say, okay, there are some copper companies or copper projects that are emitting 6 or 8 tons of carbon per ton of copper produced, and we're saying we're going to emit less than 1 ton, and you put a $200 a ton copper carbon tax on that, it becomes a pretty meaningful premium that we should be able to achieve relative to some of these more carbon intensive mining operations. So look, we can't quantify it yet, but we're looking to the future and saying, okay, we need to position ourselves for what we think might be coming, and we're hopeful that that will add value to us as a company.
Okay, and obviously for companies like Wood Mackenzie, and there are a lot of companies out there doing the same thing, selling this type of service to you guys, it's good news for them. But do you think it's going to become, well, almost mandatory, obligatory, de rigueur, however you want to frame it, for all companies to do this, at which point then you can judge yourself in a very different way? I mean, they saw the chart in there in terms of where you sit, bottom decile potentially with the Scope 3 emissions. Is that going to be how we should measure companies going forward in terms of our investing?
Well, I think it's absolutely one thing that you've got to consider, because it talks to the executability of these projects. If you're looking at a project that has a requirement to have a large coal-fired power plant sitting beside it in order to get into production, you would start to question, will that be achievable in the new future that we're facing as a mining industry? So yeah, we think it's important. Is it massively important right now? Probably not, but this is really part of our strategic positioning of the company as we move forward towards copper production.
Right, and in terms of your credibility now, because one of the things we've always talked about is this project needs scale, right? And you've always talked about, well, we think it's there, and you started to prove that can be the case. Does this report take into consideration the scaling up of what you're doing? Because obviously they would have started this a while ago before you knew the potential of the project.
Yeah, look, the benefit of this analysis, it shows that we can connect to the grid. So there will be no implications on whether or not we scale up this project at all by pursuing the strategy that we're pursuing. We can take the same or more energy from the national grid. The benefit is it comes from renewable sources, of which there are several developments up in the Atacama region that we could potentially do direct power purchase agreements with.
Okay. And do you think this will also help you with, we're probably straying into territory, but I didn't really intend to talk about today, which is, given that you're starting to prove up what is, quite a nice project, in the market now, there are other companies who are struggling a little bit, perhaps ripe for a bit of M&A activity. Is that now on the cards, given the traction that you've managed to get over the past few months?
Look, I think there's been a definite shift in the M&A activity in the base metals space. I mean, we talked a little bit about it on our panel discussion. We also have a view internally that we obviously have Greenstone as a significant majority shareholder in our company, who are a private equity fund that at some point will need to have a liquidity event. We believe that this aspect of the project only improves the desirability of our project to large corporates, because as you see the announcements from Rio investing $7.5 billion, some big announcements and, quite frankly, grilling of Mark Cutifani at Anglo American on his Scope 1, 2 and 3 emissions. It is becoming an incredibly important aspect of the business development for these majors as they go forward. And it will limit some of the projects that they can buy if they're really rigid in their internal controls on that. And so as a result, logically, a project like Marimaca is going to be significantly more attractive because of that carbon intensity profile.
What next?
Well, we've got a lot of work going on the ground. We're infill drilling at the moment. We are most likely going to go to an infilling campaign on those depth extensions that you talked about, with the goal of putting out an updated resource next year. We've delayed the feasibility study because we want to make sure that we take the right scale into the feasibility study. And we think that those drill results will change the scale of this project, which is obviously, as I always said, the one weakness of this project was that it's just not massive scale. It is still a very big project. And so really it's all hands to the pumps to move the project towards that feasibility study kicking off next year. And then in parallel with that, permitting, water connections, obviously the electrical connections, doing all of that work so that we are putting ourselves in a position once we have the answer from the feasibility study to very quickly go into construction. Because, as we discussed again on the panel, in the next 3 to 4 years, 2024, 2025, there's not very many new copper projects coming on, and we believe it to be the perfect time to become the new copper producer in Chile and globally.
Okay, Hayden, I appreciate your time. I'm jumping on the call here. It's the report, McKinsey report, well worth a read. It asks the right questions, and in your case, answers them as well for your project. But for retail investors, have a read, work out what's important and what's going to be important moving forward. Hayden, appreciate your time.
Thanks, Matt.